Good morning and hello, I'm Professor Code and this is the Forex Supermodel Racing Review and Forex Review for Tuesday the 15th of November 2022. We've got nothing to review for yesterday as we had no bets, and unfortunately it's the same again. We're having a really quiet patch on the racing at the moment. We've got no filter 1, which is our structural filter, no ratio, no alternate, and our new filter N-1 is not kicking in yet. We had a non-runner on that on Saturday, so the account's static at 52.9 units, approximately 53 units in profit overall from a peak of 72. So that's dirging around and being annoying. On the Forex front, yesterday we suggested that the pound was going to be soft, and ultimately in the morning sessions it climbed up quite high and then came off, so that was relatively correct. You're seeing some pound data at 0700 this morning, which is in a while from this video because we're quite early, and so they're taking a little bit of the shorts off the pound complex just to settle up before this data, but the likelihood is that the pound will continue downwards. And if you look at the overall situation in the markets, really, you've got the dollar index. The dollar index has come off a fair bit, and the transmission through the bond market with the US 10-year. So the price of the US 10-year has come up significantly, which is what you'd expect in that sort of transmission. You've got gold has taken advantage of dollar weakness with its inverse relationship. Oil, however, quite often has an inverse relationship with the dollar as it's priced in dollars, but it's not happening. Oil's shopping about mid-range, which suggests that the oil market's not buying this dollar weakness, and that the fact that there's going to be demand destruction in the Western world due to global recession, etc. So that's something to bear in mind. The Bund, which is the German equivalent of the US 10-year, what's that doing? That's sort of dirging around mid-range. The Europeans can't really make up their mind up whether they're stuffed or not. Wall Street and equities generally have obviously came off a lot, and now they're coming back, and it's sort of at various technical resistance and support levels. So the general theme is that the markets are sort of pretty much in denial on. They're jumping on this dollar weakness due to the fact they think inflation's starting to ease, but inflation is only a temporary pause in inflation, and as such we're going to see dollar strength again as the Fed has to ramp up interest rates along with all the other dozy central bankers. So that's where we are really. Today, if you're trading, the likelihood is you say you're going to see this bounce in the GBP, minor bounce. Even if the data is mildly positive, I'd look to sell the GBP at very obvious peaks. So GBP, you're going to get a bounce, and then you want to be on balance. Your bias needs to be negative. The GBP, the UK is heading for some tough recessionary times, and our leaders are doing as much as they can to make them worse with tax rises and you name it. So that's where we are. The racing's very quiet. We've sort of gone sideways. We had a long period of losses, seconds, 12 seconds, etc. in 22 bets, and now we've got a period of we're sort of out of the market. We've been dabbling in a few lay bets which have been pretty mediocre, and on the Forex front's going very well. We've had two trades which have both done very well, 130 pips between them, so that's good, but generally this is why if you're trying to make a living out of racing and Forex, you need to have a good be up to a certain scale where you can just sit along and absorb these quieter times. And that's not always possible for most people. So you need to have a more longer term view and try and build it up and get some secondary income going somewhere. Anyway, so that's another story. We could do a video on that, but anyway. But anyway, thanks for watching. Thanks for subscribing, and goodbye.